It's time to pick on the week. I am the hunter and the Russell 2000 stocks are the prey. And it's that simple. I'm going after the weakest US market, and as long as the Russell is not making new highs, I'm going to use that as targets. I'm going to start looking at the weaker stocks that are slowing down the Russell versus the SPX versus the NASDAQ. So why focus on the primary index and just shorting it when you could short the actual members of it that are dragging it down, right? So the Russell, even if it's being stage 3 or beginning of stage 4, you could overperform the index easily by choosing its weakest members in its downtrend. Or if you're trying to outperform an index that's exploding to stage 2, you could actually choose the best members in that index going up. And that's all that Stan was. We're going to get to it in a few moments when we do the weekly Stan Weinstein setup. The Mansfield relative strength. It took me a while to understand what it meant. I thought it was the RSI, and that's why I'm on TradingView, because a couple of guys who programmed that indicator. It compares a stock against any other stock. But in particular, you want to compare it against the index it's in. At least compare it always. I baseline it to the SPX. That's what you're all trying to beat. If you can't beat the SPX, then might as well play it. But right now, I have a setup right here. It's the Russell 2000 Stan Weinstein setup, and that's going to compare it on against the Russell. So I just popped this one. Daily moves filtered by worst performer. And I went down the list. There's a few here. BIOS. Trying to go back down. There was another one here. But I stopped on srdx. And that one, I think it could be a good candidate for a... Oh, look at that one. Don't buy and hold. Look, monthly defined top, head and shoulders. A lot of volatility. Monthly charts reduce a lot of it. Breakdown, sideways move. Some noise close to 12-month average, but broke down, pull back up, sideways move above. Very hard to play at this stage here, but right now this Synaptics is breaking down. But okay, this is the one I'm looking at today. Surmodics srdx monthly candle chart. God, look at that. Took forever. Nice huge base right here, 10-year base almost, 2009. Oh, even had here a breakout. Couldn't quite make it out. I need a little bit more. So that's why you always use your risk and money management. Pull back down. Another breakout here. Tempted. Pull back. Some weakness. But after that, the buyers came in. They never let it close below that 12-month average. And then just skyrocketed to the moon. And the further you are away from that 12-month average, eventually... you wake up the sellers and you have a reversion to mean and you get sucked back down. And right here I have distance away from the 12-month moving average. And look at that. Wow, 80% away from 12-month average. So I'm always looking at that. When you get back close to it, usually you have good opportunities to enter. If it pulls back close towards the most likely just here. We had a pullbacks close towards 12-month average and then goes back down. Below an important support, now turn resistance. You have good opportunities to enter short when it comes back up. But this big warning sign that you were due for some type of pullback. And here it is. Went down. Huge red candles, monthly candle chart. 5%, 15%, 4%, 22%. That's your warning sign right here. You're out. Close below 12-month average. If you didn't get out on the smaller time frames, this would be your final warning. And that's just the initial damage. You're still inclining 12-month average, so you still got some trend, some momentum going upwards, but these candles can't quite make it. Oh, closed above. Oh, this was a candle of hope, but the next month did not make it back below. So right here, this type of zone is like the prey zone. I mean the prey and hope zone. Why be there? What you want is you want to enter here in these type of consolidations where 12-month average is starting to go upwards and you're closing above monthly defined breakout line. And where all the weak hands have been out, and now you're just free coasting up. Here is just pride that keeps you in. Danger, danger, danger. Get your chips out. Forget this stock that he treated you well. Don't get unattached to it, and try to find stocks that are right here at the beginning of the cycle, not in the danger zone. Sure, it could continue, but you have a lot of damage here, a lot of resistance overhead, a lot of stuff to overcome. While here, after a long multi-year base, there's almost nothing to overcome. And when it breaks out, it's a vacuum. There's no more sellers or barely any sellers. Sellers coming in are short sellers or people who want to take profits. But it's not buyers that are holding out to try to break even. They gave up a long time ago. All these people that bought up here, they've been rinsed out here over the years. They gave up, and there's nothing left. Like Stan says, no close overhead resistance. Well, this is close overhead resistance right there. So 12-monthly average is still angling upwards because of all that, but it's gonna start slowing down. We could wait for a monthly close, maybe some more price. Maybe this is gonna keep sucking it up until the 12-monthly average starts declining, and then we go back down. So we're gonna zoom in on the weekly, see how bad it is below on the weekly. Stan Weinstein. Oh, against the Russell. Gonna compare against the Russell. Okay, remove all that. Beautiful, beautiful. Stage 2. Far away from the 30-week moving average. But after that, when you had that close right here below that 30-week moving average, it was time to get out. Not a good sign. And here's the Mansfield relative strength. And what's pretty cool about this indicator is if you're outperforming the SPX, if you're above an inclining 30-week moving average, all part of the checklists of Stan Weinstein's trading framework, highlights green. So visually, power zone, stage 2, most of the time, I add more checks to make sure that we don't get whipsawed into the least possible number of times. Even if we have risky money management, you want to avoid those small stages right here. But right here we're red. And red means underperforming the SPX or underperforming who you're comparing it to. Now we're comparing it to the index it's in. Declining 30-week average. It's rolling over. So remember, smaller time frames, they turn over first. The daily probably turned over even when before the 30-week did. 30 weeks is turning over, and the monthly shouldn't be too far off to follow. Broke down, and this Ichimoku cloud, this is a nice thing I picked up from Isa Trader on stageanalysis.net. It kind of visually helps you see where the close under support or close overhead resistance is. And that green cloud is support created by that uptrend. And you see how it picks it up. Whoa, zooms it up, helps it come back up. Right here would have been a nice, well, not a good entry yet because you want to be out of the cloud, but this candle right here, close below Ichimoku cloud, close below declining 30-week moving average. It could have been a nice entry here just to start half position. You could have started here. Look at this volume here. Big down day, huge red volume. And now we're out of the cloud, guys. This is a bona fide stage 4. Starting right now, underperforming the Russell. I just want to go back on the monthly. I want to re-see. Here is my monthly defined support right here. So we could have a bounce right here. We had a gap down, but the price action came back up. You draw that, and when you're here on the weekly chart, this is where you could expect a bounce. So this could actually bounce right here on the monthly defined support. Weekly defined support just a little bit higher here. So this is a zone of support. We have to wait. Maybe this is going to bounce up. It's going to need more time. Still below a declining 30-week moving average. And the longer you're below the 30-week average, the longer you're below that 12-month moving average, they're going to start rolling over. And when it's really mature to break down below the cloud, then you have a nice stage 4 continuation and breakdown. And that's it, guys. That is what I see in the cards for Surmodics. If it closes above the 30-week moving average, you're out of there. It invalidates the whole premise of this possible short. But right now, this stock is showing weakness. It's underperforming the index it's in. It's below support. So you just got to make sure that you don't get trapped here for the bounce. You could take half position right up here. And eventually, when it breaks down below that important monthly defined support and hits, look at that right here, hit some previously defined resistance turn support, price action could bounce off that and then go all the way up, bounce now on this support and resistance, go back down, same game over and over, lower highs, lower highs, lower highs, until the move is done, until there's no more sellers or buyers coming in, and then the price action closes, and then you exit right here. Stage 4, downtrend. All right, guys, can't wait to pick another Russell 2000 stock apart tomorrow. Ciao.